All right, guys, we're back with another video for you. Just wanted to do something a little different this time, I think. I want to go over some concepts from a trading group that I was a part of recently for about 6 months. I started at the beginning of basically the crash in February. It was about a month before that. I had no idea a crash was coming. Was very blessed to have found this mentor, essentially this coach at the time. Something that I was like praying for, really. I wanted a coach that could kind of help me learn how to trade. Greg, amazing at kind of overall macro, but as far as like getting into a trade, learning how to trade, how to kind of think about the markets in real time versus having to wait for Greg on his YouTube channels, or he wasn't really too active in the chat, so I couldn't really get his input on a lot of stuff. His chat is a little bit kind of crazy. There's a lot of people in there saying just crazy stuff, and all they talk about is gold and silver, it seems like. So I was looking for something a little bit more into how to trade options directionally versus either selling premium as some people do, and versus just trading commons, just trading stock. So this is a guy I found. His name was Sam Parikh. He caught my attention on Twitter with just some of the crazy stuff he says. He's just hilarious. He doesn't type things correctly. He doesn't really you know give an F, so to speak. So uh, the thing is once you get into his room, now I've since left because it's $400 a month to up to $1,000 a month to be a part of it. So it was getting a little pricey, but I felt like I'd learned enough for my account size to be in there because this guy's trading like hundreds of thousands into positions. I mean, it was just, hard to keep up. But I had gotten enough out of the educational experience that I wanted to, try to go out on my own, try to do things on my own. It's been about 2 months now that I've been out of the group. I still follow his, free Twitter. He's got a private Twitter. But some of the concepts here you see on the screen are some of the things that he taught about, intraday trading, because we're talking about, not really swing trading. You're really just, every trade is unique. Every trade is its own. He doesn't believe in swing trading or day trading. He says the trade is what it is. You don't go into it thinking that you're going to swing it. You go into it and it's moment by moment. You're thinking, what is going to happen today? What is happening right now? Who cares about tomorrow? Who cares about what happened yesterday? So anyways, he guided me through the crash. He guided, he has like 1,500 people in his chat. He guided all of us through the crash. It was just something it was astounding, is what it was, to see how him and some of the other traders in that chat room were able to kind of navigate through. And I remember the day when they literally called the bottom, multiple guys in there, when Bill Ackman went on CNBC and started crying and whining and saying that, all hell was going to break loose. I should get the video here to show you guys because that was it was crazy to listen to him, and he was like almost crying. And everybody in the chat at that moment was like, yeah, we're just going to call this the Ackman bottom. And I think it was like March 23rd. I think it was literally the bottom. It was like one final flush. And since then, we've just been kind of rising. So really interesting to see how real traders think, how they do things. So basically, a long introduction into kind of a different take on a video, which is somebody else that I learned from a lot. I learned a ton from this guy on how to trade these markets, these crazy markets. And I still listen to him. I still follow him on Twitter. So a lot of stuff he says still keeps me on track. But you can follow him on at smartertrader on Twitter. I got the thing on alert, so any tweets he puts out, I'm reading right away. Same with Greg. So, but the main concept that you get are these right here, and he'll say them. He's got a morning call too. He'll say them over and over and over and over and over again because we as traders, we're kind of retarded sometimes, and we think we know more than we do. We trade too much. We think the charts are going to kind of tell us the future. Um, One thing he always says is it's all about the news and it's all about the options premiums. He's got some crazy methods on how he can see plays before they happen just based on the options premiums. And I might go into a few of those that I did here, but using the same kind of method. So the main thing that he says is trade to your own account. Now I'm going to put some links into some of his videos. He has a pinned one on his Twitter, and he's got a couple of videos from a YouTube channel that he has from like 5 years ago. But just listen to some of the stuff he says. It's going to give you a really good insight into how a professional trader from 30 some years, how they think. It's really simple, but the main thing that he says is trade to your own account. He had a $1 million account that he would trade in every week, and but his thing is if you have $1,000 account, if you have $50,000 account, it doesn't matter. What is your comfort level? What is your risk level? He says the 1 to 2% per trade of your account is garbage. He says it's like if you can handle losing 10K on a trade, and no more. If you have $1 million account and you can't handle losing 10K, then that's your risk level. It doesn't matter how big your account is. But if you have a $15,000 account and you're okay losing 5K, that's your risk level. So he says, over and over again, this is how he's able to manage a chat room of 1,500 with, all kinds of account sizes. Is look, we're going to be buying these positions where some guys are buying 100 contracts, and in his case, he would buy 500 contracts sometimes. I would see 600 contracts of a single position. You would buy, I would be buying one contract. I'm a small time fish here. So every once in a while I would get crazy, maybe buy 3, maybe buy 10 if it's a small premium. But most of the time I was literally just buying one contract. Now the other thing too is, if we buy a contract and it went up, say 50, 70%, in the same day, some guys, you want to close that out because you're trying to grow your account. You want to grow slow. You taking a hit, $1,000 account taking $100 hit, that's pretty big, versus like, you got a $50,000 account taking a, $1,000 hit. It's not as big of a deal. So, you got to trade to your own risk and your own tolerance, essentially. Now, this guy, Sam, he would buy 300 contracts and he would hold it. He would hold it 3 or 4 days. I have a hard time doing that with one contract. So, and you'll see that. I'm going to go over my trades here. And if anybody even watches this video, it's going to be kind of interesting to see some of these trades from this last week. And I'm only showing this because I had a pretty good week. I've had a pretty good couple weeks, but this was one of my better weeks for a long time now. But yeah, I just holding contracts for me is really hard because I don't know how many times I've had a good winning trade and then it just goes to zero the next day. So I got to get over that fear of just kind of holding it, expecting zero. One thing I gotta also talk about this too. Expect zero. This is something that he says all the freaking time. But trade your own account, buy less. One of his main concepts too with buying options is you buy less. You buy, contracts that cost less. And so you got this idea of stop losses. He doesn't believe in that when it comes to options. There are no stop losses. You just buy less. So if you're willing to risk, say you're going to buy some shares and you're like, okay, I only want to lose $200 and hopefully I can make, 20, 30% here. Well, if you're buying options, you just buy options for $200. That's your risk level. If it goes to zero, okay. But you got to be okay with it going to zero before you buy it. That's the idea of this expect zero. You will trade smaller, you'll trade less. So that's the idea about kind of building in a stop loss when you're buying these options accounts or options contracts. Rolling up, rolling down. So he also says don't ever buy a contract unless it can go 3x. So I'll go over some of the trades that I thought were good, that I thought could go 3x. Now, it doesn't have to go 3x. You can close it at any time, kind of like what I was saying. But it's got to be able to meet this criteria of being able to 3x. So This is where you're buying these 100, $1, $2, $3 contracts a lot of the time. That's about the bulk of what you would do with his strategies. And you can only do it if you think that it has the capability of going 3x, or you can close it out anytime. So I'm okay with just a 2x or even like 50%. But uh, so then the idea here is that if you do hit that trade and you do hit that 2x, 3x, you got to roll up or roll down. And what that means is, say you buy that dollar contract, it goes to $3, you close it, okay? Because you need to protect that profit. You close it, and then you can roll up. So then, say you buy a 50 strike, it goes to $3. Roll up, buy the 55 for $1. So then, no matter what, you still come away with a little bit of profit, and you still get to stay in the trade instead of just holding it, thinking it's going to keep going. So eventually, your risk in a trade of losing becomes too great. You gotta cash it in, take a little bit of the profit, put it back in. So I've seen him do this so many times where he'll have a huge position, 300 contracts, and he'll type in the chat room like, "Look, guys, this thing is worth $1 million right now. Should I close it?" And he obviously knows what he's going to do, but he's just kind of testing people. And everybody's obviously like, "Yeah, close it, roll up, take the million, take 100K, put it back in, and roll it up." So that's the idea of this roll up, roll down strategy. And you'll hear it in the video. Check out his videos. He's going to explain all this way better than I am, but this is coming from my perspective from being in the room. Another thing was think simply. I don't know how many times we get into an argument or get into some discussion in the chat where people are just going way too deep into things, thinking things way too crazily, essentially. And so his thing is just think simply. Take the news for what it is. Obviously you want to think about things from every angle, but keep it as simple as possible. Just because you start getting into the theories and you start getting all philosophical, it's going to mess with your trading. Another thing that he likes to say, he says this, he says, charts are garbage and burn all your books, which I always thought was hilarious. Which is funny because I've read 50 trading books, some of them multiple times, and he's sitting here saying, "Hey, burn all your books because they're all garbage." And in a way, charts and books are kind of garbage because they're all antiquated in a way. So I mean, every 2 years there's new methods, new strategies. You can't be. A lot of times there's some time and tested stuff. You got your bull flags and your pennants and chart patterns and stuff. They still proliferate all the time, but he's basically what he's saying here with this concept is, these charts that you're looking at aren't telling you the future. They're only telling you what has happened, up until that point. So, he'll be in like even with Zoom right now. Zoom has been, Zoom dove here a couple weeks ago, and it's been under the 50-day moving average for, quite a few days now. Most chart watchers aren't typically looking at trying to buy Zoom on the long side, but he doesn't care about that. He only cares about what the options premiums are saying. So these options premiums, if you learn how to read the options premiums, then you're going to be sitting in a situation where you can almost tell when upgrades are coming. You can almost tell when news is coming. You can almost tell, like, how far, how big of a magnitude of a move a stock is going to go. This stuff takes some time. Like it took me a long time. I'm still not that good at it, but I can, if people are interested, I can go over a little bit of how I read the options premiums and how I set that up. It definitely helps. I don't trade without looking at options premiums anymore. It's nearly impossible. So I do use charts, but I mainly use charts only to set levels and targets. I don't even care. Really, I really don't care about the chart patterns and stuff like that, and moving averages and all that, which is nice because everybody's looking for that edge. So option premiums, if you learn how to read them, will be your edge. And then again, obviously he stresses this expect zero. So if you go into a trade with the idea that it could go to zero, which you should expect, At any point in time, the president could die, or there could be a war broke out. They close the market for 5 days, and your $10,000 position is going to open zero. So if you're okay with that happening, then you can go ahead and place the trade, and you're going to trade so much different if you already expect it to be zero. Another thing about trading your own account is, you know, the only thing you care about is, he would say this, net net. So he would never focus on his losing trades. It was only the winning trades that matter. So if you start the week with a certain balance and you end the week with a higher balance, who cares how many losing trades you had? You still ended up, up for the week. So another thing too is that if you were willing to go into a trade and you're not okay with what your cash balance looks like in that account by using this money for this trade, don't do the trade. So a lot of trades I had to look over because he's playing Shopify, he's playing Amazon, Google. You're looking at $6, $10 options contracts. These are too much for me in my account. I don't play those. I play $1 to $2 trades, and you'll see that here in a minute. But so definitely go check those videos out. Definitely follow him. You sign up if you want to try and join that chat room. I would say it's worth. I don't get paid anything to for you to go join. I'm not even part of the deal. This guy was awesome. He's one of the best coaches, mentors you'll ever have in the markets if you just listen to him. I would say it's definitely worth trying him out for a month or two. Definitely worth the investment. So I wanted to just show you his Twitter here. It doesn't look like much, but definitely go watch this video here with, it's going to kind of go over his methods and stuff like that. Here's him, obviously eating out and blah, blah, blah. But here's some people talking about some of his most recent trades. He called some Netflix. Here's one of his accounts. He bought some Roku. I was in this Roku trade. I already knew what was going to happen too, just based on the premiums, but it turns out he was in it as well. Took a 1 to 4 there. So you can see he bought 400 contracts. I was playing with maybe 5 on this. But some really good stuff, making 120K in one single trade is kind of nice. And you might think it's a fake, kind of a paper account or stuff. It's not. We see the options flow. So I've been looking at like Cheddar Flow, Options Flow, and he's made a trade on like Twilio or something, and it'll pop up on the options flow. So it's definitely real. So wanted to go over my trade. This is kind of how I keep track of my trades for a week. I do it on a weekly basis. Then I just reset everything. But kind of wanted to go over this a little bit. I'm not going to go over every trade, but just some of the trades that I was playing that I thought were similar to this method, where I was just kind of reading the premiums, just kind of watching them and seeing. Obviously Tesla this week was an easy one because they were getting included in the S&P. I was just looking at the premiums. I would set up a watch list for Tesla as far as its options go. I would set up something like, okay, I'm going to look at the 600s for this week. I'm going to look at the 570s, the 550s. I would set them up in a list. And if I see the 600s, at Tesla's trading at 470. If I see the 600s at $1, then this thing's going to explode because the market makers that are writing those contracts are scared. They're scared that this thing is about to explode on them. It's about to go crazy. The volatility is just blown up on them. So they're writing these contracts. They're not willing to sell them for anything more than $1 at 130 points up. Now on Tesla, 130 points up is really about 500 points because it's pre-split. So you just knew this thing was going to fly. So I took some trades. My first one was a little bit safer, I would say, because it's early in the week. So I took the 470 for December 4th. So I gave myself a couple weeks, skipping Thanksgiving week. I paid $13 for this contract, which was was quite a bit for me. I even averaged it down. I had up to $2,700 on this. And this thing ended up going, if I would have just held it, again, this goes back to me not holding plays as much as I should. If I would have held this went to these went to 33, 35, 40. So I could have turned 2,700 into 8K if I had the balls to hold it. I didn't. Obviously I was okay with taking 500 bucks. That's enough for me. Um, it's a big play for me, but I knew that the situation called for, taking some heftier risks. So then I kind of kept playing it. Uh, See, I dropped shares for these. So I sold my shares. I had shares when I went in with this. So I dropped the shares. I kind of reduced exposure. I went out a little farther, went up a little bit higher on the strikes. So I bought these for 12. I didn't buy two. I just bought one contract. And then, I sold these at 20. I sold these at 20 in about an hour and a half. So, I made 7.7, that's 770 bucks. So 62% there. Anyways, so on and so forth, using the premiums and using my target levels on my charts to kind of guide me here. I use some of Greg's method. Sam is only going to play the most current week. He doesn't really play next week's or 2 weeks out in general. So I use some of Greg a little bit here where I'm, playing a little bit further out, reducing my risk, in some cases playing a lot closer to the money. But yeah, so that's how that went out. Anyways, I keep track. So my month to date is always going to be updating with every week. So I'm at 2580 for the week, for the month so far, which is one of my best months for a while now since I left the group. Anyways, I wasn't doing too hot for the last couple months, and then I've started kind of coming back. My average contract size only 2.2. Even after taking some of these big ones here, my average contract size is pretty small, which is good. That means I'm buying less. I'm not paying too much. I'm paying the minimum I can get for these contracts that I think can go 3x. I keep track of my current risk in the market, so I don't want to have too much risk. I'm really not okay going over $1,000 in most cases, unless it's a special situation like with Tesla. So I keep track of that. If I see that my risk is getting over 1,000, I start trimming, I start cutting back. My risk churn, I don't even know I came up with this, but I just kind of wanted to see how much money I'm kind of churning through the market in a week. So I ended up churning through about 10K here, 10,240 bucks. Just multiply this by 100. So I wanted to see how much money I'm risking, through in and out of the market here. So using that, I used 10K. I ended up gaining 22% here for a week. Now this is my average per day. I'm still a losing trader basically because I've only been doing this on a daily basis for about 9 months, since about the beginning of the year, end of last year. So I still got some hefty losses that I kind of got to chew through. So, technically I'm still only losing about 30 bucks a day, even after a month like this. I was a horrible trader about 6 months ago, but so this is where I keep track of the account balance at the beginning of the week, and then where it ends up at the end of the week. It was actually more like 18.5 at the end of the week, and then at the end of every week, if I have profits or anything like that, I take money out because I don't want to leave that money in there to lose it. I don't know how many times I've done that. I remember when I first started, I ran an account from 1,000 to about 10K. I thought that was amazing, and then 2 weeks later, it was at zero. So always take your money out. So next week, I'm probably going to start out about this again, and see how we can kind of build it back up again. So you can see this month, I'm only up month to date like 2580. So I've got some other losses that can go through my weeks here of how I keep track of everything. But this spreadsheet, and there's probably better ways to keep track of stuff like this, but this is just kind of how I do it, just because I like Excel. It's on the cloud. I can kind of, anywhere I'm at, I can kind of look it up, and I can manipulate it if I want to make some changes and stuff like that. So yeah, that's kind of a longer video, a little bit different. Just kind of wanted to see how people liked it. Please like, subscribe. We also, Webull right now is doing a ton of free stocks. I think you can get up to 8 free stocks right now. I don't usually plug Webull, but they just came up with this promotion. So go to that link, get some free stocks there, and we'll see you next time. I might do a video here tomorrow, just going over some the Greg's trading system and stuff like that and how that's looking. Because I still monitor that every day, kind of just an extra tool for me. But yeah, thanks guys. Talk to you later.